Hi, Stuart Mellody here from 5people.com, sharing with you how we raise finance. All of this, what I'm going to share with you, is related to the downloadable information on how to build a multi-million pound investor bank. Key focus of today is demonstrating to your potential investors how you put your debt and equity together. Why is that of importance? To the investor, they want to know how they sit with the main lender, why you've chosen the main lender, what's the flexibility, what's the dangers, how do they work with you, what's the relationship. So all of this needs to be taken into consideration as part of the bigger picture, and this will give the investor a lot of confidence that you've gone to these lengths. So if it's not an area of your expertise or strength, then get somebody involved who really understands how to put this together. The debt and equity combination is a vital mix that you need to be able to understand and get right and demonstrate to the investor. There's so much that comes into this rather than rates. So I see a lot of people saying, well, that's a high percentage, or that's too much of a rate. That's scratching the surface. There's so much more to it than that. What's the experience of the lender? What's their their background? How have they worked with people that have come onto a bit of under a bit of pressure? How flexible have they been? Do they take a commercial view on stuff and help you through things? All of this is really, really valuable if ever you get into a position where it's a little bit difficult in the middle of the project. That's when you're going to need the funder. And if that funder's charged you a little bit more of a rate, but they're flexible with you, they could save you so much money. It could save you from going down. So demonstrate that to the investor, and also link it into them why it's of value to them to know, and why it's of value to them that you've done all this work, because they will want to understand how they sit. Now, if they're a first charge investor that's going to give you, fund the project fully, then again, that's slightly different. But show them how you're going to make the investment work in this instance, and what their money's going to do in order to be de-risking the whole model together. So they want to know how you're going to effectively use that money. Is it debt and equity, or is it all first charge, and how secure are they? You want to demonstrate as much of this as possible, because protecting the investment is going to be paramount over and above the profit that they might make. So yes, they all want to make profit. Of course, investors want to make profit, but they also want to protect. They really want to protect the money that they're putting in the first instance. I've had it many times where I've spoken to people that we've gone to, help out of a sticky situation, and the investors have said, "I'd be happy to get my money back." They're not thinking of the profit; they're thinking of protecting the 100K or the £1 million, rather than the potential profit they might make. So it's really important that you understand it for your business, to protect you, but also them. And these are the kind of things that will help you establish a great relationship with the investor and secure them investing with you over and above everyone else. This information I'm sharing is part of a series of information that we've been linking into the downloadable Build Your Own Investor Bank on our website. If you haven't already downloaded it, this will make a lot more sense if you do, and I look forward to hearing how you're getting on with it. Keep in touch. Take care.